For 10 years, this chart was the Bible of crypto. But in 2025, that Bible has stopped working. We had the ETF pumps, we had the Trump pump, but every single time that we thought Altseason was starting, it did get cut short. Now, I'm not going to hype you up in today's video. Okay, I think we've had enough hype over the last 12 months. If you stick with me today instead, I'm going to explain to you how we got to where we are today, what has changed, what has gone wrong so far, but what the outlook also is for the next 12 months into 2026. So if you like the sound of that, stick with me. Let's begin. So back in 2023, we saw a massive run from $23,000 up to $75,000 for Bitcoin, putting in a new all-time high before the halving, which was unprecedented. We've never seen this before. Altcoins, of course, they had a pretty mild alt season. It wasn't a full-blown alt season, of course, but it definitely was fueled by this move, by the ETFs with Bitcoin. They were approved over here. Rumors started over here. And we also did have the advent of AI, as we know it, ChatGPT, and everyone was really, really excited. Okay, but what followed this was a cooldown. We have to have a cooldown, of course, when BTC 3Xs, and what this looked like here was a move from $75,000 in around March of 2024, again before the halving, all the way down to around August of 2024 when Bitcoin found its bottom at $50,000. Overall, this move was around a 33% drop. Now, the interesting thing was during this 8-month period, I remember as clear as day, there was still hope. People weren't happy, of course, there was fear, but people still believed in Altseason, mainly because this still was the halving year. We had just had the halving. At the same time as well, Bitcoin's dominance continued trending higher, which typically isn't normally a sign that the cycle top has taken place. Normally, Bitcoin's dominance falls towards the end of a massive alt season, and so far we really didn't see a massive drop off, and during this time, again, Bitcoin gained strength over altcoins. It was from these lows at $50,000 when we actually began climbing, breaking out of that megaphone pattern, and then going into that Trump pump as we know it. We hit a new all-time high of $109,000. Again, extreme greed came into effect, and things were looking quite good. Now, it was at this time when I started to, particularly other people as well, I think it was a common theme at this point, believe that this was the start of the alt season pattern. And why I say that is because if you have a look here, this is Bitcoin's chart. At this exact time, this Trump pump, what was simultaneously happening was the typical sign we normally see when alt season actually begins, which is breaking out of this descending channel or descending wedge. Okay, you can see the others to Bitcoin chart here where altcoins, particularly, excluding the top 10 altcoins, actually outperform Bitcoin. Now, if we go back throughout history, you can clearly see this is a common pattern going out of the bearish conditions where Bitcoin has all that strength in a sort of bear market period. We break the channel, altcoins start outperforming Bitcoin, but importantly, they don't outperform Bitcoin and Bitcoin's price explodes or goes down. They just start to sneak up on Bitcoin. And that's what it looked like was happening at this point. And this is normally the start of a sort of 12 to 18 month sequence where, again, we see altcoins gain strength. We usually do see a drop, okay? And then the actual alt season here is normally this and this. So in this 2.5x pump from 50,000 to 109,000, where again, we did see altcoins break up here. There was a mini alt season, things were looking quite fruitful. Well, of course, that was eventually cut short by the tariffs. Okay, Liberation Day tariffs were announced as Trump was officially sworn in to the administration, and ultimately we had markets panic, a further 31% drop, but this happened in a much faster fashion than what kind of transpired over the 8 months we saw back over here. And so we had this, but within crypto itself, within altcoins, we had a vacuum, which came from the Trump and Melania meme coins that launched kind of simultaneously. Trump drew in around about $9 billion and Melania drew in about $1.6 billion roughly of capital out of recycled money in this market. So anyone who essentially made, in my opinion, any money over this period here, maybe even this period, and those who decided to sell their altcoins that were holding even at a loss to FOMO buy these two, well, as you can see here, that was eventually evaporated soon after. Now, this definitely did hurt. I know a lot of people at the time were saying, well, the top was 109,000. That was the warning signal. Trump and Melania coins, meme coins launching, suck liquidity out of the market, typical how the cycle ends. But the thing is, I think a lot of people, including myself, still believed in Altseason for many different reasons. I think one of the main reasons was we didn't actually really have the breakdown of the 4-year cycle yet. This still happened early 2025. And for those who remember, this was around this time here. We were still in the halving year. We had just broken into the green zone, which is the good year, or the post-halving year, which is the 12 months we normally do see altcoins, eventually go parabolic. So that was still ahead of us, not behind us. So like I said, there was still hope. That hope came in the form of a move from $75,000 from the Tariff lows to the new all-time high of 126,000, and even before that, roughly 125,000, which was about a 70% move. So this move was quite convincing because it was playing out exactly as the post-halving year normally does in green, which is, again, roughly between a 12, normally it's a bit longer, but roughly a 12-month period where we kind of go up only for altcoins. It was playing out, and it did seem convincing. There are, of course, bearish signs in place, like the bearish divergence on the RSI, just like we saw with the prior cycle as well. However, it was, I think, pretty unanimous at that time that Bitcoin would have one last gasp, one last push into mass expansion, followed with altcoins as well, because they hadn't really moved. And then we would have the breakdown of Bitcoin dominance into Altseason, followed by the inevitable crash. Although for me, and you can check with my content, it was around about halfway through 2025, around this time, where I started to feel like something was off. This cycle just didn't sing to a similar tune as the 2 prior 4-year cycles. Even the way this cycle was formed was definitely different. And so I thought to myself, what is the actual thing that drives this cycle? What even is a bull run anyway? And I think ultimately, what are the actual economic effects of this thing that we base all of our conviction on? Which is, of course, the 4-year halving event. And to all those questions, the answer kept coming back to the same thing. This isn't an internal crypto problem. This is a macro problem. This is a liquidity problem. And so I thought to myself, that is why this cycle looks and feels so different. And I think it is the reason why we haven't had this full-blown alt season period like we have in every other bull run before this. And so when you overlay Bitcoin's chart with this down here, which is essentially the thing that makes this crypto cycle tick, it's supply meets demand. When we see these upticks on the halvings here, this is the new issuance of Bitcoin halving, so it creates a bit of a supply shock, a little bit. But what we need is the 80% of the equation. We need the demand. And so this chart shows the demand. These green zones are when demand is actually expanding, when demand is actually flowing into crypto. And we can see the effects of this. Price goes crazy. These big yellow periods and the red periods are when we are slowing down with the inflows into crypto. And red means we're actually in a contractionary state, which means there is no money flowing into crypto. And so no matter how much we halve the issuance of supply, you can see here with what happened in April of 2024, if we are in red, which is contraction, things just don't really move all that much, particularly for altcoins here. You can see ever since we've been in this red zone, altcoins have gone sideways essentially. And the only 2 times we saw slight green periods were actually the breakouts here we saw in the ETF and the Trump pump. That's by no coincidence, I don't think. If you have a look again here, green periods, mass expansion. When there is no demand, these red periods, altcoins don't do all that much. And so that was my fundamental aha moment in this cycle. The reason why Bitcoin's gone to the top right-hand corner like it has is because of the adoption it has had. Okay? It's been legitimized on Wall Street. It's been legitimized in the government. People have got the ETFs now. There's a whole bunch of stuff that's happened, but it just hasn't been the same for altcoins, which solely do rely on this liquidity. Many of you will know this. This is actually the business cycle. And why it's important to look at the business cycle when looking at the demand or the money coming in or leaving crypto is because what the business cycle fundamentally is these peaks and troughs, which is essentially when consumers are spending money. People like you and I retail. When we're spending money, this chart actually goes up. Now, the average salary in the United States is $61,000, which means roughly take home per week after tax, we're talking about roughly $900-ish in the back pocket. Now, when conditions are tight, when inflation is high, when we essentially have interest rates high as well for mortgages and everything, people don't have the money to spend, like I've said. And so when there's no money to spend, Now, the business cycle goes into a state of trough, which is contraction, and so therefore no money can flow into altcoins. When we have some expendable income, when everything's been paid and we have leftover money, it is just natural behavior for us to want to try to escape the rat race, to try to build that pot of cash to buy a new house or multiple houses, essentially live that American dream as people talk about. Now, when we don't have that ability, when things are tight, okay, we can't afford to do that just as much as we want to. And so that's why the correlation here with the business cycle and the others chart is so jarring. It's by no coincidence. Okay, when people have that money, they take the chance. Altcoins are one of the best ways, I think, in the current world to go from, $60,000 income per year, looking to retire at 60 years old, to fast forwarding that to maybe retiring at 30 years old or 40 years old if you play your cards right. You don't have to start any crazy businesses. You don't have to stick your neck out and risk your whole life savings or your mortgage. You kind of just sit on your hands and wait. But you see, this is why I think the outlook for 2026 is likely at this point, I'm not guaranteeing anything, but at this point in time, much better than 2025. Because we're actually starting from a point where we are in that trough in the business cycle. And when you're at the bottom, when you're in the trough, there's only one way to go, and that is, of course, up. You can see here, most central banks around the world are actually cutting, 84% of them to be exact. Now, the US does tend to follow with a slight lag. I think the reason why they're not cutting right now is because of the massive stimulus that went into the pandemic back in 2021. Inflation rose to 9%, and we're seeing the fallout of that right now. But you can see we're starting to curl up. This is an inverted chart. So I do think this does come. And when this does come, we will see the business cycle here in purple go up as well. Two really good forward-facing indicators for the business cycle is the FCIG, and this is the 3-year in green and 1 year in red look-back periods. So they'll look back at the last 1 and 3 years respectively in how the financial conditions in the United States are and forecast both the next 12 months. And they're still ticking up. And usually the business cycle likes to follow that growth with a roughly 1 to sometimes 6 month lag. We can see here they both peaked in around October of 2024, and we saw an uptick into expansion in January of 2025. We're waiting for the prints for November's data. If these continue going higher, I will be even more bullish for 2026. Now, if we take the business cycle and we overlay it with the year-on-year growth for the global M2, this is another really good forward-facing indicator for us. It normally does peak before the business cycle does, and it's because it's, in amongst many other things, a gauge into how much money is in savings accounts of retail like us and institutions alike. Now, of course, when people have more money in their savings accounts, this will go up. And when this goes up, that means that likely money will find its way into the business cycle because people have more money. So look, there's economic factors that are going to support the idea that 2026 will have a lot of those tailwinds, a lot of the supportive bullish factors to push up the business cycle, essentially giving us more money. And when those things fall into place, we'll essentially have that money tick up the business cycle, but that also means that crypto finds more liquidity, and that obviously leads to altcoins having more liquidity. And that's been one of my most jarring things that I've noticed this cycle, is I believed in the 4-year cycle, guys. I did, and I think a lot of people did as well. It just had happened time and time again, but we never, at least I can confidently say, I didn't really look into the driving factors, the 80% of the reason why we have these cycles to begin with. And it was always demand, always liquidity, always the business cycle, maybe even always the debt refinancing cycle. So that is why I think 2026 and the outlook for it is far better than what we've experienced so far. We are starting with pain. We're starting in pain now, and things are likely going to ease. Now, I don't think the fallout of that easing is going to be good, by the way. We have to be very careful with what comes after this next move. I think we'll see the pop of the everything bubble. I think we'll see the pop of the 26.5-year cycle. We'll see the pop in the housing market. We'll see the pop in the liquidity cycle. It's all going to pop, AI and everything. But I think before that, we'll see some good growth. So with that being said, I'm not saying I'm an oracle. I'm not saying that I'm blindly bullish. I'm saying this is what we're seeing now. So thank you so much for watching this whole video, guys. If you've made it this far, you can support all I do with this research and these videos with a quick like down below. Talk to you tomorrow. Take care. Bye-bye.